Welcome to the webinar series of Advait on the topic Strategic Finance Office. Thanks for taking time and joining the session. I'm Srilata from Advait, a chartered accountant, and I have with me CA Krishna Upadhyay sir, co-founder of Advait. Good evening, sir.
Good evening, Srilata.
So this is our third webinar on the series Strategic Finance Office. In our previous two webinars, we had covered concept of SFO, Strategic Finance Office, about myths, misconceptions on when, where, and how a strategic finance office can fit in, followed by a few foundational case studies, used cases of our own experiences with insightful discussions around them. If you had missed our live sessions, you can catch them up through the recorded ones. We have streamed them on YouTube. And in this webinar, we are planning to cover two more interesting case studies, but these are little advanced in terms of efforts required from the perspective of a strategic finance office partner, and of course, with exposures and complexities involved in them. Without any delay, let's get started. As a first case study, let me walk you through one of the most interesting journeys we have had in our strategic finance office experience. This is a case of a private limited company, an energetic startup with a strong product vision, with ambitious founders, and with a fast pacing operating cycle. Like many startups, they were growing quicker than their financial systems could keep up. So we came in at a time when the company was stepping into continuous fundraising cycle. We joined them as a virtual CFO team, which is a part of the strategic finance office model of ours. The first thing we noticed was this. Every month, every week, the founders were preparing for investor discussions, follow ups, due diligence requests and preparations, and data validations. And the biggest challenge was information existed everywhere, but nowhere at one single place. The first thing that we did for them was a structured data room. So what we did was we built a complete investor ready data room that had everything, including financials, MIS reports, compliance working supported by related filing documents, key contract details, payroll reports, and many more to the list. This made a big change because the founders were able to focus and put valuable efforts on preparing for those real conversations with investors and not chasing files or documents or data. Meanwhile, what we did was we did a complete health check report and presented it before the board for grabbing their approval and attention towards critical operational fixes. Because if you see behind every investor deck, behind every valuation report, there must be a strong internal system that supports it. We worked on setting standard operating procedures, establishing approval mechanisms at various levels, and creating accountability in the system. Many of these are not visible externally, but we believe that they form the backbone of a finance function. This was one-time task. After that, it was all about monitoring and routine review, which was under our scope of routine engagement as well. And another critical area they struggled with was payroll. Uh, there were calculations on Excel spreadsheets without any version controls, and it was impacting not just salary payouts but also on compliance side. So what we did was we migrated them into a proper payroll tool, and very importantly, which was suitable for their size and their operations. See, for a fast growing company like this, which was hiring aggressively, this one change alone saved hours of efforts every single month. And this again is a one time task, if you see, and after that, it is all about monitoring and reviewing it on a routine basis. And one more critical aspect that I would want to join into this story is we experienced serious cash flow management issues. There was a year when cash flow position became extremely tight. This was the moment the SFO function had to step up. We built a detailed week by week cash flow. We prioritized payments strictly based on criticality. We paused, convinced a lots of non-essential spendings. We even assisted in creating revised hiring plans. And overall, what we did was we closely monitored inflows, commitments, and timelines. And the result was the founders were able to take those tough calls with confidence. So that was the ultimate result that we could achieve, and that was mostly needed for that particular year of cash crunch. And yeah, so this was a long story touching on various aspects and what we experienced. And if you notice, it's not just about setting some processes and providing some comments, it's about setting boundaries and ensuring sustainability. In fact, we even had those conversations where we had to convince, saying this is not the right times for this spend, so let us focus on survival now. So, and we believe that these kinds of conversations bring in real value as a strategic finance office. And now I hand it over to Sir for deeper insights on this experience as a whole.
I think, Shilata, you set a good context about this entire case study and the importance that a strategic finance office brings in. Like we've been telling in our previous webinars as well, finance office is a combination of multiple roles, carrying out multiple functions for different outcomes. One thing that is common is that the day the finance office turns into a strategic finance office from being a reactive accounting office, that's when the real change occurs. Like you rightly said, when we entered in, it was a stage when it was just an accounting function somebody was carrying out, and yeah, maybe some compliances were being done on time and some were getting missed out, but the books were never really closed. So the first priority that we took it up there was to ensure that a strong foundational accounting practice got built. Um, so this ensures that the moment a foundation gets built, you can start doing things which are after that foundation. You can start planning better, you can start analyzing better, you can start forecasting better, and you can be better prepared with unfavorable outcomes. So the first step, the moment we were stepping and doing all of these, setting up the accounting system, the next big challenge came, which is the company had a great story, a great product, a great set of founders. But like every great story, capital is always short, and capital is required to grow at a faster pace. And the company decided to raise external capital. At that stage, the real test for us as consultants began to really transform the finance office from being okay, we were doing incremental transformation at that time. That was a wake up call even for us to say, hey, a challenge can come any day. And how do convert the challenge into an opportunity? And that's when we put on a strategic hat and then made sure that every data came on a single platform. It was available at the easiest possible way to retrieve it. It sounds very simple, right? So this was a company which already was in existence for about 10 years or more at that point in time. Being a company which existed for that long, data was all over the place. Accounting system had gotten changed multiple times. The accountants themselves had gotten changed innumerable times. There were different ways in which they were accounting. Data was scattered, and you all understand the fact that when a due diligence is being done, it's not like an audit. It's not like I establish a true and fair view about the financial statement. It is going further deep into really understanding the levers of business which are expandable. Those levers which can actually, with capital, can grow massively and create stakeholder wealth. When that has to be established, the story alone is not enough. The story should be backed by evidence and documents and insights and information. So we were able to put all this together, carried out a sort of a vendor diligence ourselves to make sure that those levers were identified. The story, the numbers behind the story were actually carved out and ensured that they were documented. Once this was happening, we realized that at the pace in which these were being done, we did see that the operational processes were not commensurate with what was the need. Then we quickly changed ourselves from being the CFOs to controllers back and said that let's fix the processes. Let's write down standard operating procedures for multiple things, including some operational areas, how milestones of software development and implementation is tracked with their customer. Because we did see that contracts are signed, first billing is done, the second billing is never done for a protracted period of time, and then that was resulting into cash flow challenges. People are burnt out, working very hard, but nobody is tracking milestone. So we brought in the discipline of tracking milestones very clearly and ensured that billing attaches with that milestone, and there are different people put on accountability of both delivery and raising invoices and collecting money. So once this was coming to some amount of stability, capital had come in, company started hiring aggressively, payroll had to catch up. What hitherto was a Excel spreadsheet based payroll. Senior team members came in, they were expecting transparency in the way the payroll data is available to them. Pay slips had to be made available, and the tax planning for the employees were to be automated, etc. We made the effort. In fact, to step one step back, the payroll structure itself was incorrect. The salary structure had to be redesigned. That involved tough conversation with the employees because their expectation when they came in versus what the reality was started becoming different. We then took over the aspect of being that finance director, where we sat with all of them, counseled them, helped them understand this complexity, and put the payroll data out. Like any other startup story, suddenly funding dries up. You have cash flow challenges. That phase also we saw. Like Srilata said, we again took over as strict controllers, started controlling the cash, how, where, when it is spent, prioritizing collections, pushing people to collect money sooner, deploy sooner, get UATs done, etc. So we played a significant role. So why we bring out this story to you is to tell that as a finance office, it's not a reactive afterthought that you have to work on. As a finance office, one needs to be strategically ahead of the curve, switch roles quickly, and naturally, that kind of a skill set expansion won't happen if you don't really have a strategic finance partner who could do this. While it might be desirable to have a experienced finance controller and a, CFO to come in and do that role or play that role, but then it is not always possible, affordable, and exciting for such a senior CFO to come in or a controller to come in. That's when it's all about how do you convert your finance office into a strategic finance office, and what kind of a partner you have who could switch roles from being an accountant to an analyst to a planner to a foreseer to a negotiator. You will have to play multiple roles. So that is how we were able to navigate in this particular situation, and we continue to do that even now. So the same company is going through different cycles even now, some repetitive cycles and some new cycles that have come. So as a strategic finance office, we are making that effort to constantly evolve, brought in new people into the system. Like in one of our previous webinars, we mentioned not all of this we already had as skills, but we were able to identify the need quickly, plug in the required skill sets immediately, and then deliver to the client. So this way, we converted their lackluster and slow finance office into a strategic finance office to help them navigate the difficulty and the challenges that they were going through.
Yeah, thank you, sir. So this highlights again that how inside a strategic finance office. Switching of roles has to happen based on necessity, and overall, how a strategic finance office as a function carries its journey along with business journey. So that alignment is also very critical. So yeah, with this being done, let's get into the second case study for the day. This experience was with a fast growing company which was ready to expand internationally. This company had cracked its product market fit in India, and their next goal was to build a global footprint. They believed that the first step was hiring sales leads in different countries, and they were already in the process of screening candidates. When we stepped in as their strategic finance office partners, we felt that it was not necessary in terms of both cost and, more importantly, in terms of complexities involved in setting up of a different entity, especially at their phase of early expansion. But the founders were already in the thought process of setting up of a legal entity, hiring sales leads, but they had to know that that comes along with compliance obligations, local taxation formalities, payroll rules, additional operating costs and admin overheads, and most importantly, if you see, it diverts management bandwidth as well. After evaluating various their expansion models in detail, we suggested a simpler route of exploring channel partnerships than hiring expensive full-time resources in those countries. This what this gave was it gave them local market access without any payroll commitments and immediate require, and there was no necessity to set up an entity on an immediate basis. So let's go to the next phase. After some months, so they were in a growth phase where the company grew drastically, and they were planning to shift their core operational activities itself to some specific geographies. The real strategic decision comes into picture now. At this level, if you see, setting up of an entity was necessary because of two aspects: to ensure that the IP is not lost, and also to have a better secured control with their operations, which are directly linked to product quality as well. At this phase, there were certain portions where we were unsure, especially when it comes to specific local rules and compliances and complexities, specifically related to that particular geography. However, we could bridge the gap by leveraging with appropriate connections, and this was sailed through effectively and efficiently. If you have noticed, overall, it's not static at all, and the role that we play as a strategic finance office partner is very dynamic, and it's not at all about a strategic finance office partner knowing anything and everything in the world. It's about connecting right points at right points in time. So, with this, sir, can you give your insights on this experience?
Yeah. So on this, it's very exciting, right, for a company based out of a particular jurisdiction. In this case, it was India, but it could be any other jurisdiction, which we have also dealt with in some other matters. As to, internationalization is something that everybody aspires to, because the more geographies that your products or services reach, the better it gets. Your learning curve gets faster, and the kind of solutions that you give improves as well, and naturally the business and margins go up. So in this case, this Indian company that we were consulted by was came with a very simple question to us, saying that, hey, there is this geography, we want to set up a company here, can you help us with that? Now, then it would have been very easy for us to say, yes, we will do it, and then go ahead and help them set that company up in that jurisdiction. But what we did is we asked the founders and, to take a couple of steps back and tell us why are they setting up that entity over there. The moment we asked this question, the simple answer was, I'm seeing some customer potential coming out from there, and I don't yet know, typical sales cycles are longer. So we thought that we'll set up an entity there. It will become easy for us to acquire that customer. So then the next question we asked was, okay, setting up an entity there, how will it shorten the cycle? Or how will it get you a guarantee that that customer will convert, that potential will convert into a customer rather? No, these questions were difficult to answer for the founders. And then they said that, okay, then what are you suggesting? Should it we not go international? I said, no, we should go international. We need to, explore those markets. But there are better ways to do than setting up entity. Setting up entity is probably the simplest byproduct that can be done of internationalization, but need not be the first step. So we guided the client to say, whom you are trying to hire, can you say that instead of hiring a full-time resource, we will sign up with channel partners with a variable cost and not a fixed cost? And we were not even trying to suggest that the sales effort should alone become a fixed variable cost. We were trying to state that the administrative cost should become a variable cost, primarily because at that scale, when a particular entity is still in an exploratory journey in a geography, adding complexity unnecessarily diverts the board's attention into seeing whether, hey, did I do my payroll taxes in that country correctly? Did I do my minimum tax payouts in that country correctly? Am I following the right kind of generally accepted accounting policy? Did I not violate a particular labor law, environmental law? I don't know what different laws will come in. And of course, it also adds up the need for a consolidation of financial statements that might have to be done at an India level, get that audited, unnecessarily mounting the cost that had to incur without real tangible benefits. So that's where we uh, sort of push the founders to rethink their decision about setting up an entity there. As consultant, we turned ourselves into a strategic finance consultants over there, whereby we made sure that they once signed up with a couple of channel partners in jurisdictions that they were trying to. Eventually, when customer need came up that you have to sign up with a local entity only because of some insurance requirements, data protection law requirements, etc., that's when we sort of went ahead. After, in fact, in one country, we already had paying customers. We had converted them into a customer directly of this Indian entity. And then when the prospects increased and they were also increasing their spend with this client of ours, is when we told them that, hey, set up a company in this particular jurisdiction, which is the right thing for you to do because the market access is sooner here, the availability of talent is good over here, the general socio-economic kind of a characteristic of that economy was good and that country was good. And then we set it up over there, which gave us significant leverage to this client of ours to penetrate further into that geography. And this was particularly in the Europe, like some of you understand, is not a very easy jurisdiction to navigate. Languages change, the needs change, though there are OECD norms that some countries follow. The tax norms are quite different in each of them. There are some minimum tax payouts that one has to do in those countries. So what we did is that we navigated all of this for the client. It was difficult. It was not the easiest thing to do. But then, like Srilata mentioned earlier, we did connect with the right kind of partners, brought them on board, bought that conversation or had that conversation for a protracted amount of time before we made the decision without actually impacting the business itself. Because the partnerships had already gotten established, the business was already happening, there were people already representing. You might also ask us as to why did you not suggest hiring an employee directly with the Indian company and not set up an entity there? That adds multiple layers of complication. When you have to hire an employee in a different country and they work out of there, that adds maybe a permanent establishment risk, that may add multiple other tax and regulatory risks which are not really clear. Number one. Number two, IP protection becomes very important. What kind of, so IP is not just the scientific IP that we talk about. The IP could be a location IP. The IP could be a customer list IP. The IP could be the price list as an IP. There could be multiple IPs. So if this gets highly diluted and is available with people with on whom we don't have control over, then it becomes that much more challenging. So we were able to help the client make this switch at the right point of time, and made sure that whenever they needed that entity, we were quite well prepared with that kind of a checklist of sorts as to, if at all we have to open a entity in a particular jurisdiction, what are all the minimum tests that it has to pass, that decision has to pass. We sort of codified that into the board's governance structure itself, whereby after that they did incorporate a couple of more subsidiaries in a few jurisdictions, including one that they are doing currently and in the process. But the board is now very clear. If this code of governance that has been set up for the board is not followed, we will not even think of opening a subsidiary, however important that it may sound. That's the kind of intelligence that we brought in to the board. Of course, we have to acknowledge the counsel that we got from the local connects that we had in those jurisdictions, and of course, our own strategic thinking. And more importantly, we also have to acknowledge the trust that the client placed on us in this situation. It's very important. When a finance office has to transform into becoming a strategic partner within an organization in that operational growth, the board and the founders need to have a considerable amount of trust on the finance office. And whoever is occupying the seat as a CFO or a controller needs to also demonstrate that ability to do that, and not just act as a reactive node who will just account for things that have already happened or coordinate with bankers for things which have already been done. So that's where a strategic finance office becomes a very critical part, and that is how we were able to navigate in this particular scenario, in their internationalization adventure.
Thank you, sir. So if we look at both the case studies, so first case where it meant about building strong internal systems, strengthening controls, and tightening and convincing things wherever required, ensuring sustainability, and bringing in discipline and maturity in finance function as a whole. But second case study is quite different when compared to the first, because it was all about aiding the company to expand internationally with the right balance, ensuring that they grow without losing control and with protecting IP. So with this, we conclude our webinar series on strategic finance office, and would like to leave you with a simple yet insightful thought, which is with ongoing dynamic business environment, finance is no longer a back office function. To reiterate, it's a strategic engine. So yeah, with this, I would like to thank you all again for joining the session. And like mentioned earlier, if you have not, if you had missed our live sessions, you can always watch them on YouTube where we have streamed them. And meanwhile, if you want to know more, you can visit our website, read our blogs, and subscribe to our newsletters, and stay updated with key finance insights. And most importantly, stay tuned for our upcoming webinars on more interesting topics as well. Thank you, and thank you, sir, for your insightful thoughts again.
Yeah. So just another word of conclusion from my end. So the last three webinars, what we tried is to build a playbook of how a finance office can actually transform into a strategic finance office, using our own experience and case studies on what we did. So these, if you notice, this maybe 90 minutes over the last three webinars, what we did is an absolute playbook for an organization to sort of adopt and become and transform their ordinary finance function into a strategic finance function. This also acts as a playbook for somebody who's looking at internationalization of their businesses, or chasing a funding cycle, to setting up controls, etc. So That is what over the years Advait has been able to do, build these playbooks out of our own experiences of having done all of these for multiple clients of ours who have trusted us over a period of time. So for more such ready playbooks about how to do and what to do in the finance, one, you could write to us. We'll be happy to share our thoughts with you. Two, you can also tell us what more are areas that you want us to talk about. We will bring them in our webinars. Three, for those of you who would want to avail our services and understand how our teams can work with you, reach out to us. Our website's quite easily navigable, and then we've made onboarding with us an extremely easy process. Through this, you will be able to get access to exceptional professionals that work with us, both as our own employees within Advait, as well as a group of network of people around the world through whom we make sure that such kind of complex situations are brought into light. Thank you so much for subscribing, tuning into this, and listening. Hope to see you again very soon.
Thank
Thank
you.
you.